In the month of January, I took $50,000 in payouts from my 5 funded Top Step accounts. In order to do this, I used the exact same trading strategy every single day in order to lock in $15,000 of profit per account, equaling $75,000 in total. And using Top Step's payout rules, I was able to pull out $50,000 of that $75,000 in profit in just the month of January alone. This has made my total amount from payouts officially reach the 6-figure mark. I've now pulled out $100,000 in payouts from various prop firms. In this video, I'm going to show you proof of payout, and then I'm going to walk you through my entire trading day from pre-market all the way to charting to executions. Everything I do every single trading day in order to earn me that $50,000 in payouts for the month of January. But before we get into that, if you guys are interested in a mentorship or coaching program, I have a link in the description down below for an application to that. Also, join my free Discord. We're almost at 500 members. Link for that is also in the description below. Okay, so now getting into my actual proof of payout. As you can see right here, this is my Top Step dashboard. This is an actual live video. This is not a screenshot. This is the actual website for all my accounts right here. As you can see, we can go back to the first payouts that I ever took. We have 5, 10, 15, 20. 25, 30, 35, 40, 45, 50, 55, 60, 65, 70, 75, 80, 85, 90, 95 plus. I have right around $5,000 in Apex payouts at $1,200 in my funded futures payouts. So we just barely breached the $100,000 mark using all those different payouts, but a large majority, 95,000 of that being from my Top Step accounts. Okay, so now getting into my actual daily routine using my trading strategy, the first thing that I'm going to do every single morning is I'm going to go to the high time frame, the 4-hour first, and then eventually the 1 hour, but we're going to start at the 4-hour, and I'm going to map out prior highs and prior lows, and these are going to be my price targets for price action throughout the trading day. So what I'm going to do here, I'm going to go to my tools, I'm going to pull out the horizontal ray tool, and I'm just going to start mapping out the 4-hour highs and lows that have not been touched since being formed. So as you can see here, we're going to use this day, this vertical line, as a marker. So everything that's going to be going on is going to be from prior to this day. So I'm going to map out this low right here. I'm going to map out this low right here. And then another thing to keep in mind is because liquidity and prior highs and lows, these areas do not expire. So we're going to zoom out and we're going to find older highs and lows that have not yet been hit, because these are still areas of high contention that are going to be very important levels for us to keep in mind for the future. So I'm going to mark out right here. I'm also going to mark here, here, and this low right here. So now we have all of our prior highs and lows mapped out from the prior weeks and months, however long back this is. Again, it doesn't matter because these high and low areas of liquidity never expire. There's still unfilled orders sitting either just above or just below them that are going to be very important targets for price to hit. It's going to be like price action is almost attracted to these areas. So these are very important areas, and it's what we're going to be using for our price targets throughout the trading day. So now the next thing that I'm going to do is I'm going to map out in my head where I think the current trend of the market is on the 4-hour time frame. So as we can see right here, we were entering a pretty horizontal or consolidation period right here. We have the open to the week right here where we open significantly down. We have a nice recovery, so this would be like an uptrend right here. However, recently you can see that we are starting a little bit of a downtrend. And the way that I can determine whether we're in an uptrend or a downtrend is based on prior highs and lows, whether they are getting higher or lower. So if your highs and lows are getting higher, that's an uptrend. If your highs and lows are getting lower, that's a downtrend. Very simple, but it's much easier said than done, and the market doesn't always work perfectly. That's why trading is actually a little bit harder than it seems on paper. So anyway, getting into mapping out the actual trend on the high time frame. So what I'm going to do here is I'm going to go to my tools and I'm going to go to path. I'm going to click on that tool. And what I'm going to do is I'm going to map out from the prior high that we have right here. I'm going to start here, and then I'm going to map our low to our next high, to our next low, to our next high, and then down to where we are currently at. So as you can see from the path we've drawn on the 4-hour time frame, it seems that we are in a significant downtrend. You can see each high is getting progressively lower. So we have this high here is lower than this one, is also lower than this one. And then you can see our lows are also getting lower. We have this low right here followed by another low. So we have 3 consecutive lower highs and 2 consecutive lower lows. And now price is trading very near our prior low. So from this, we can infer that price is looking to continue trading lower to form a new low, which in this case it does end up doing. But again, this is all pre-market before we've actually seen where price action is heading for the day. So this is how we map out our high time frame trend. Now, from this point, since we started at the 4 hour, we got a big picture idea of where the trend and price action wants to go prior to our actual trading day. So we're going to zoom in from the 4 hour to the 1 hour to, again, just try to give ourselves a little bit better idea of what is going on big picture in the market. And it's very similar. As you can see, the highs and lows will not change as you increase or decrease your time frame. All the important highs that we had mapped out on the 4 hour are the same ones on the 1 hour. Now, where things get a little bit different, as you can see here, is in our individual trends and in our actual highs and lows that we have formed. So the only thing that changes here is we're getting now, instead of condensed down to 4 hour candles, for every 1 4 hour candle, there's now 4 1 hour candles. So we're getting more candles and a little bit more information from this. So what looks like a very obvious and clear downtrend on the 4 hour is looking a little bit different on the 1 hour. But you can still see that generally speaking, we are consistently creating new lower lows and new lower highs. There's a little bit of inconsistency with that, but when trying to map out trends on the different time frames, as long as they're mostly agreeing with each other, I tend to use that as what I go with during the trading day. So even though this isn't a perfect downtrend like it looked in the 4 hour, this is still a clear downtrend in my eyes. So I'm going to continue looking for shorts. Even though the 1 hour looks a little bit different and potentially worse than the 4 hour in terms of a downtrend, this is why we use the different time frames, because as you'll see shortly, as we change time frame, the trend will look a little bit different on each one. And as long as we can gauge the general idea of what is going on with the high time frame trend compared to the low time frame trend, this is all we really need. It doesn't have to be perfect. It just has to give us an idea of where we want to look for price to go in the future. So now that we've determined the 4 hour to be a downtrend, the 1 hour to be a little bit worse, but still looking to be a downtrend, we're going to change to the 30-minute time frame and we're going to see what that's looking like. And as you can see, it looks pretty similar to the 1 hour. So there's not really any new information to get from this. So now I'm going to change it to the 15-minute. And now hopefully we can get a little bit better information. We're getting more highs and lows mapped out as we are zooming in and creating more candles. So as you can see here, we can get a little bit different view on what's going on. We've created a new lower low, a lower high, a lower low, a lower high, and then we've traded horizontally for a little bit, which this is not good in terms of price action. This isn't what you want to see. Times of consolidation or horizontal trading like this, there's just no money to be made. So there's really nothing happening here other than just chop. So during this time, there's really nothing to do here other than sit around and wait. The 9:30 open is about to happen anyway, so it's fine. We're not dying to get in a trade pre-market, especially when conditions are choppy like this. We're looking for strong directional movement in order to get into our trades. And in this case, we've already determined that we are looking for a short based on the high time frame trend. And now the only thing we need in terms to actually enter in a trade is for the low time frame to also be downtrending in order for us to look for actual executions. So now I'm done on the higher time frames. On the 4 hour, 1 hour, 30-minute, 15-minute, these are what I consider high time frames, and all I'm doing is looking to get a bigger picture of the direction that the market is looking to go in the future. So once I have that direction figured out by gathering all the information from all of the high time frames, and in this case, it's pointing that we're looking into a short. So now at this point, I will now go down to the lower time frames. These are the execution time frames, the 5-minute, the 3-minute, the 1-minute, whatever it is you use to actually enter in your trades. This is where I'm going to go at this point. So for me, that is the 1 minute. I'm now going to go to the 1 minute time frame. I'm going to zoom out and find where we're at. So now that I'm here on the 1 minute, what I'm looking for at this point is for the lower time frame, which for me, this is the 1 minute time frame. I'm looking for an established downtrend in this case, because we saw high time frame is downtrending. So I'm looking for an established downtrend on the low time frame in order to enter in a trade. So as you can see from this point on, we are consistently setting new lower highs as time is going on. So this development of price action right here is indicating to me that this is a good time to enter in a short. Now, in terms of actually entering in your trade and where you want your executions to be, in my opinion, there's no one exact entry criteria that should let you determine whether or not you're entering in a trade. So for me, there's a couple different things that I like to do in order to determine whether or not I enter in a trade and where exactly I do enter in that trade. So let me just explain my thought process here when looking to enter in trades. So generally speaking, I'm looking to enter in a trend and join in that momentum to the price targets that I've already mapped out on the high time frame. So in reality, I don't care very much about my exact entry. My goal is to just join in the correct direction and have my stop loss placed where that trend is potentially broken and just let that trade run. So for instance, once we have this downtrend established where we have a lower low, a lower high, a lower low, I'm looking to enter anywhere in here with my stop loss at this prior high right here, because I know if this stop loss gets taken out, that trend is no longer downtrending. Once this high gets taken out, or once this high is established and this high gets taken out, the low time frame trend is no longer in my favor. So I use these prior highs when I'm shorting to map out where my stop loss goes. The actual entry itself does not matter that much. So in this instance, our first price target is hundreds of points away from the current price action. So keeping that in mind, it doesn't really matter if your entry is here, or your entry's here, or your entry's here, or if it's way up here. As long as you're shorting, you're going to catch a majority of this move. You're going to catch 95% of this move, even if you don't get the absolute perfect entry. The main thing that matters is that you catch the majority of this move until it hits the price targets that we've previously mapped out. Now, with that being said, I do look for certain things when I'm trying to enter in short trades. The main one being what I call rejection candles. They're also known as hammer candles. They're candles with long wicks in the opposing direction that you are looking for price action to go. We are in a downtrend. So what we're looking for is candles with long wicks to the upside. This signifies that price tried to go up but failed. So in this downtrend right here, there's a couple instances of rejection candles that you can see. This right here is the initial rejection candle that started this downtrend. And then there's another one right here. There's another one right here. There's another here. They're literally all over the place. There's one here, one here, one here. There are rejection candles, prices being rejected towards the buy side to the sell side constantly during this downtrend. So that's not set in stone entry criteria for me by any means, but when I am looking to get in a short, that is one thing that I do consistently look for that has worked out very well for me in terms of determining whether price is going to continue in the direction or not. These hammer candles or rejection candles work out really well for me. I like them a lot. But that being said, I don't think by any means it's absolutely necessary to enter in on a rejection candle. Now, the last thing of importance that I want to talk about and point out in this video is the fact that when I'm looking for trades in a certain direction, in this instance, I'm looking for shorts. If my shorts don't initially work out, however, trend is still in my direction, or if the low time frame trend were to flip against me and then eventually come back to the direction that I was looking in, I'm looking to consistently enter in trades to the sell side until that price target is hit. So just because I fail a trade or a couple trades go break even, or even if I lose a couple trades, as long as high time frame and low time frame trend are lining up in my favor, I'm going to continue hammering the shorts until my price target is hit. And then once my price target is taken out, I'll take a step back, reassess the situation, see if I want to continue looking for trades or see if most of the volume and volatility of the day is actually past us. And then in that instance, I'll just stop trading. And that's basically it. That is my daily trading routine that I've been doing for the past couple months that has earned me over $100,000 in payouts from various prop firms over the past couple months.